coming up. Taimur Baig is now joining us, Managing Director and Chief Economist at DBS Group Research. Taimur, good morning. Great to have you with us here on the program. So, interim deal not ruled out, Taimur. What happens on the 1st of August in the absence of an interim deal, India-US?
I think there will be some softly sort of worded statement about how the end game is just around the corner, as it is the case with most Trump-related negotiations. But there'll be some parameters. As you can see, the really tough one was the one with EU. And at the end of the day, they did get a few parameters out, the 15% tariff on most. That's an important one because there's still going to be additional tariff on steel and other things. So I don't think it's going to be that much different. Mind you, the big thing in my view on India is A, market access for US companies, and B, the pharma aspect, which is under a different sort of discussions, that it will not be part of the core deals that all these countries are signing up with the US. So I think 1st of August will not end uncertainty. There will be some clarity, some, like I said, softly worded statement on some initial parameters. I think Trump likes to call it the concept of a deal. I think that's what we are heading into, not final word at all.
Taimur, hi. Great to have you on the show. So, it's everyone's got the deal. India's still waiting. But what's the sense? And August 1 is now 4 days away. So do you think, do you think that this will eventually play out in India's favor?
So I live in Singapore. We're also waiting. We don't have a letter, if you will, as far as the US is concerned. So India is not the only one, but you're right. From Japan to the EU to the UK, a bunch of countries have now letters associated with the 15% baseline and maybe something extra, for example, in the case of Vietnam. So I think, where would India be? I think India would probably get some sort of an indication that it would be on the more favored spectrum and end of the spectrum. So like Indonesia has 19%. I'm looking at India to be at the most 19, if not lower. I don't think Indian negotiators are going to just roll over and agree with everything that the US asks. And I think the Americans are also realizing that they are dealing with a fairly capable group of trade negotiators, and they're just not going to listen to everything that the Americans say. I think the US and India interests converge, even as hard-nosed as Trump is. He recognizes that. And so I am moderately optimistic. But again, I remain focused on the sectoral aspects, on semiconductors, on pharma, on electronics, because these things affect India's present and future. India wants to be a big consequential exporter of electronics to the US and the rest of the world. But if we're going to start on day one with a 15% tariff, if not higher, on electronics under the separate sectoral review, what does it mean for that outlook? Pharma, major exports out of India into the US, that is under a separate review. So for me, even on the 1st of August, if there are basic contours of a deal announced, I will remain fixated on the sectoral stuff more than anything else, because I think those are the ones that are going to be very, very consequential for Indian large industrial houses.
All right. Hi, Taimur. Good to see you. The other big event this week we're going to be looking forward to is the Fed. There is some optimism, maybe a surprise rate cut. That's in minority right now. But what do you view in terms of Fed rate action? And what is the key highlight you'll be looking forward to in this policy meet?
Yeah, unfortunately, so much politics around this whole Powell-Trump drama that we are sort of ignoring the important stuff of, where is the U.S. economy heading? What is the underlying inflation pressure? And does it make sense for the Fed to start giving some dovish signal? So a couple of things. I think the starting point for the Fed cutting rates last year was probably premature in hindsight. They probably should have waited a little longer, because then cutting then and then not cutting now puts them in that whole political dilemma, right? That they cut during Biden, they're not cutting during Trump. Yeah, what is Powell up to? And I think that really, really vexes Trump. But in terms of the direction of the U.S. economy, top line growth numbers are okay. We're going to get a decent third quarter GDP data. We're going to get good 3 quarters of 2025 in good growth territory. But that is the top line number. When we look at beneath the surface on the labor market particularly, but also corporate guidance with respect to tariff, I think some disturbance is around the corner. The recent employment data has been basically juiced up by state level public sector hiring. That is not a sign of a very sound economy. Private sector hiring has been waning in the US. Similarly, on the corporate guidance side, we heard from GM, and as these tariff numbers get solidified, we'll hear from more companies that what would they do with their tariff? Would they report a very large hit to their bottom line? Or would they try to spread it, squeeze the suppliers if they can, and pass on some prices if they can, and in the middle take some hit on their balance sheet? That sort of stuff, again, should worry the Fed about corporate profitability, about the dynamism of the economy. So I think they will starting this week, shifting the tone of the discussion away from inflation to the labor market, because that is part of the dual mandate. And perhaps around that, they can start justifying a glide path toward lower interest rates in the second half of this year. Not this week, but down the road, maybe the following meeting, and then again the following meeting after that.
Taimur, we leave it there. Thank you very much for joining us. Quick but good conversation as always.